The Bank of England's Financial Policy Committee launched their Financial Stability Report in December 2020. With coronavirus and Brexit, the FCP is trying to inform us on the strength of the financial system. Things are not great right now, but the financial system seems to be holding up well and should continue to do so. It is estimated that major UK banks can absorb up to 200 billion in losses, which means they should be able to withstand any forecasted event and stronger. They're supporting loans that businesses and households need and leaving cash aside for a rainy day. The Financial Policy Committee is suggesting to banks to keep prepared. One suggestion is lenders limit new mortgages at loan-to-income ratios at or greater than 4.5 at only 15%. They think this would only impact 2% of first-time buyers. This way, a lot of the risk can be removed from the financial system, which is good, preventing future headaches. New borrowers should also pass through affordability stress tests. Households applying for a mortgage will need to prove they can afford that mortgage, paying less than 40% of their income on their mortgage, even if interest rates increase by 3%. The Financial Policy Committee agreed on 8th December to maintain the UK's counter-cyclical capital buffer rate at 0.0%. This way more cash can be used today to help banks continue to support households and businesses with their needed loans. The Financial Policy Committee also mentioned the business environment right now is very difficult, particularly for small to medium-sized enterprises. Small and medium businesses have borrowed 40 times more than the 2016 to 2019 average. SMEs also tend to have operations more concentrated in those sectors impacted by the crisis and may find their future borrowing capacity limited because they have borrowed heavily already. The government has confirmed that access to its 3 lending schemes, the Bounce Back Loan Scheme, the Coronavirus Business Interruption Loan Scheme, and the Coronavirus Large Business Interruption Loan Scheme, will be extended and receive applications through the end of January 2021. Large businesses have on average repaid bank loans, but at the same time issued bonds and equity, 18 billion new equity compared to a negative issuance between 2016 and 2019. Households' debt burden is felt less strongly as households can freeze mortgage and other loan repayments for up to 6 months. The Coronavirus Job Retention Scheme has been extended. New mortgages are more difficult to acquire, particularly for high loan-to-value mortgages, as banks cut their appetite for risk. Brexit means changes in the way finance needs to be run. Regulations have ensured that UK customers with EU insurance products or EU banks can continue to use them and are regulated effectively. Major UK-based banks have been transferring their EU clients to subsidiaries in the EU so that they can continue providing services to them, as currently regulations do not allow for the UK to service EU existing clients. Thank you. Find a link to the report below the accompanying notes, and please subscribe if you found this video helpful.